The government last week curbed imports of laptops, tablets, personal computers across 7 categories, firming up its domestic manufacturing push. In FY23, India imported $8.8 billion of these 7 items brought under the licensing regime, out of which 58% worth of products were sourced from China. At the bourses, the move has led to a massive rally in stocks of local electronics manufacturers. Shares of Dixon Tech, Optimus Infracom, Netweb Tech, and HCL Infosystems surged up to 30% over the past 2 days. In comparison, the Sensex benchmark index was flat. The euphoria comes as the import curbs could benefit the local laptop and computer manufacturers which compete with global giants like HP, Samsung, LG, and Lenovo. Analysts, however, say investors should not jump the gun and let more clarity emerge on the expected benefit of the move.
This may have a positive impact over a longer period of time, because as PLI schemes get unrolled and as government focuses more on Make in India and Made in India, and more incentives are passed on to the respective sectors in the respective category, those companies will tend to benefit over a longer period of time. But it will not translate into immediate any major positives for the companies which are associated with these sectors. In terms of numbers, there's not much information available in public domain as to how much benefit will these companies get in terms of whatever restrictions the government has put in place. So it's very difficult to zero down on the number front that will benefit these companies. At the same time, I think in stock market, it is always better to let the dust settle down and then possibly take a call whether you want to buy, hold, or sell a particular stock in this category. So, let things settle down and let there be more clarity.
In the June quarter, electronics emerged as India's 4th largest exported item, overtaking chemicals, drugs, and pharmaceuticals. This was led by mobile phones on the back of the PLI scheme of 2020. Now, players such as Dixon Tech and Optimus are looking to benefit from the IT hardware PLI scheme. The recent bumper listings of Netweb Tech, Cient DLM, and IKEO Lighting also signal growing traction for the electronics manufacturing services or EMS theme. But the stocks in this space command lofty valuations. The EMS theme is an attractive long-term investment option, but the recent high valuations of the stocks could be a concern, and conservative investors may prefer to wait for a meaningful correction, says Santosh Meena of Swastika Investmart, whose top picks include Dixon Tech, Surma, and Cient DLM. Dixon Tech, Optimus, Netweb, and Surma are trading at PE multiples of 55 to 138 times their 12-month trailing EPS. Thus, it remains prudent that investors take a cautious approach to stock picking in this space. Today, on July 7, Dalal Street will react to the Q1 earnings of Bank of Baroda, Balakrishna Industries, Morpin Labs, and Usha Mart, among others.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
She's working her way to the corner office. Business Standard.